Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 151, How We Pick Stocks. Thank you so much for joining me back on the show. I hope all of you out there are staying safe and healthy during this horrible pandemic. The topic of today's show was actually based upon a new client's question. So I was meeting with a new client the other day, and maybe sometimes I overlook this a little bit, but he asked me, he said, I think it's great that you guys pick and use individual stocks. Can you go into detail on how you actually select the individual names? So I thought that might be a great idea for an episode of Upticks, because many of you have been clients for many years, and maybe we talked about it initially when we started going over to individual stocks, or maybe you're not a client and you're curious because your advisor has you in mutual funds or exchange traded funds, so you want to hear about maybe a different approach that some advisors take. But before I get into how we pick individual stocks, I want to talk about why we use individual stocks. And for many of you, you know that I began my career in finance back in 2006. And like most financial advisors, I was taught early on to use products for my clients, which frankly made a lot of sense, especially being newer in the industry. As the time went on, though, and the years went on, and I gained more knowledge, I took a course out at University of Pennsylvania's Wharton School, obviously a big student of the industry. I started to get frustrated with our clients' portfolios underperforming some of the major benchmarks. And when I started to look under the hood, I noticed that not only do, it's something like 70, 80% of mutual funds underperform the index, but also some of the fees are quite enormous. And that's tough to get over. If you're paying a mutual fund fee and an advisor fee as the client, it's hard to make money. And then if your advisor has you in an index fund or an exchange traded fund or an ETF, right? All those are basically very similar. Well, you're designed to just get the index return. But again, if the advisor is charging a fee on top of that, you're basically locking in a lower rate of return than the index. So I didn't like that either. And I don't know the year exactly, but I'd have to say probably around 2013, 14, maybe 2015, sometime in that area, we started to take a deep dive into firing mutual funds and ETFs and individual products and just going at it alone and doing individual stock selection. And the way our process originated was that we basically looked at what some of the best money managers in the industry, what stocks they were picking. It's kind of a place that we started. And we didn't go line by line, right? We want to do that because that would be called piggybacking. And again, if 80% of these money managers underperform the index, then why would we want to copy them? But obviously what they're doing is not working anyways. But where we started was we looked at some of their top holdings, and then we scrubbed that against research, right, that's published out there to formulate our own decision. And if you remember from a previous episode of Upticks, I don't have the chart here with me, but there's this colored box chart that I always show people. Maybe we can flash that on the screen here. Is that basically what we did is we picked individual stocks based on our overall global allocation to fill all of those colored boxes. So before we were using products, we just got rid of the products, and then we went and we got individual stocks in lieu of the products. Okay, and so that's why we did it. Was, we didn't like the fees, we didn't like the underperformance, and then how we started to shift over to it, that's kind of the origination of it. And then we back tested everything. Now, the problem with back testing is that it's no guarantee of future results. So while we certainly back tested it and looked at it, we didn't use that as a firm, undertaking. And so what we actually did is we slowly stair-stepped into it. So we might have only fired, 2 mutual funds, but then used 10 in our clients' portfolios. And then instead of those 10 mutual funds, we had some stocks and mutual funds. And then we slowly just evolved it over. And as our performance tracking, which we watched very closely, we started to notice that our clients, again, in the individual stocks were doing better than the mutual funds like we had hoped. And so we eventually shifted everybody over and out of products. And again, it's probably back in 2013, 14, 15, sometime in that time frame that we did that. And we haven't really looked back, and we haven't needed to, because our performance has exceeded our expectations, and certainly I would hope our clients as well. Okay, so in today's topic though, so that's how we started it and why we did it. But now that we have it launched and we're ongoing, do we continue to look back at the money managers, or how are we picking stocks today, in 2021? And we don't look at the money managers anymore. And what we actually do is we subscribe first off to this global theme. And what it has to do with this study called Weight of the Ox. And I'll tell you a quick story on the weight of the ox. And basically the way it worked is that I think it's back in the 1600s or 1700s. They had a township all guess collectively the weight of this ox, right? So they had this ox in the middle of the town, had all these people, and everybody put in their individual guess, right? So they, some guess this, I don't know how much an ox weighs, 500 pounds, 300 pounds, a ton, whatever. And what they found was that while the guesses of this town were all over the board, when they collectively averaged all of the guesses together, the town as a community came within 1 pound of getting that ox's weight correct. And so I love that story because I believe in it. It's called collective wisdom, the weight of the ox, whatever you want to think of. So what we do now is I subscribe to Bloomberg research software. In my opinion, it's probably the premier research software out there. It's expensive. And we get fed research from analysts from all over the place. And what we do is we take all of their analysis and we average it out. And that's how we go in on a macro level of picking individual stocks. So we're not just using my opinion or somebody on my team or somebody in New York, or it's not just one person, it's collectively, we're gathering all of the data that's being pushed out there, and we're using that to make our big macro informed decisions. Now, if we drill down a little bit deeper on an individual stock selection basis, there's two ways to analyze stocks, broadly speaking. There's actually probably way more than that, but on a large scale here, there's two ways. So there's fundamental analysis and there's technical analysis. And we use both, and I'll define them real quickly. But first, before I define them, a quick plug. If you're not already a subscriber to our YouTube channel, please click on this button ahead. I've been very humbled. I think we've gotten over 100 new subscribers in the past year alone. So that's the only way to make sure that you don't miss another episode of Upticks. If you're listening to this on your favorite podcast platform, thank you so much. Please subscribe on there as well. And also, if you think our content is good, a thumbs up is greatly appreciated. Also, a quick plug to Corey Bittner, my business partner. He has his own show called In the Money Insight. So you can find that on our YouTube channel. And then Scott Sturgeon, another advisor on our team, he has his own show called that's Corey's show, In the Money Insight. Scott's show is called Mental Dividends. So again, please feel free to subscribe. More great content, organic content coming out of Falcon Wealth Advisors. Okay, so back on topic here. So how do we define fundamental analysis? So fundamental analysis, in my opinion, is extremely important. It goes into the details of a company. What are their earnings? What about leadership? What is the trajectory of the business? Do they pay a dividend? Is that dividend growing over time? What is the price to earnings ratio, right? All of those factors and the numbers and the business sheets and the filings and all of that is the fundamental analysis. Do they have a good socioeconomic, background? And are they an ethical business, right? All of those things. Are they doing good for the world, right? All of those things go into the fundamental core analysis, which I believe is very, very important, right? Technical analysis has to do with more, believe it or not, when I studied this way back when in my Series 7, I thought this was kind of a joke, but it's a real thing. The technical analysis is really trading, the trading of the stock. So literally the chart or the momentum. And we use something called the relative strength index to help us with technical analysis. And what all that is it's simply an index that's publicly reported that tells you theoretically when they think a stock is overbought, right? Or maybe too high, or when they think a stock is oversold or maybe too low. It's not perfect, nothing is, but that does give us good entry points into certain stocks or exit points, or maybe we'll trim a position or add to a position based on what the market is telling us from technical analysis. So we use fundamental analysis, right? We take a deep dive into the company reports, and then we use technical analysis when we think a stock maybe has run up or it's pulled back a little bit, right? And so that's how we got macro, right? We originally looked at what some of the smartest money managers were doing. That's how we kind of established our base. Now we're using collective wisdom to make our decisions. And then on the individual security level, we're looking at both fundamental and technical analysis. Now, this is a lot of work, as you can imagine. And so I also want you to realize that it's not just me or Corey doing this on our own. We've actually built a team within our team at Falcon Wealth Advisors. And I've got 3 excellent professionals on that team. Starts off with Abby Stockman, who is an accredited asset management specialist. So she's taken the time to study asset building a little bit more in more depth than maybe your common advisor. She does a lot of trading on our team, right? So she's rebalancing clients' portfolios, making sure everything is in order as it should be. Then we have Matthew Noviks, who's also an accredited asset management specialist. Same as Abby, he's doing a lot of trading. He does a lot of options research for me as well, and a little bit of individual security analysis on top of that. And then a newer hire for us, but he's certainly not new to the industry, is Brandon Reed. I've had him on a show of Upticks before. He is a chartered financial analyst, which in my opinion is the cream of the crop when you get into security analysis. It's the highest designation out there when you're talking about individual stock picking or bonds. And it's a 3-year test. So he's passed all 3 levels. Again, chartered financial analyst, and he is really doing the majority, the bulk of the research for us now. So every week we do have a committee meeting where we go over the portfolio, what's working, what's not working, do we need to adjust anything, and we make sure that we're on the same page. And so we're monitoring it together. So the beauty is you get my experience. I've been doing it, 15 years. I've got these other professionals, but that's all they do in there. Brandon does have some client meetings, but again, he's doing the research. Certainly Matthew and Abby, their full-time jobs are in the research and trading platform. Now, before I wrap up today's show, there is one other important piece though. First off, in full disclosure, stock picking is not a game. And I know with, the invention of Robinhood and with the coronavirus, people being home and all these meme stocks and cryptocurrencies, a lot of people, you hear these great stories of, well, so-and-so made $100,000 doing this or that. Just be careful. I get it. It's exciting, but you shouldn't be gambling your nest egg, or this isn't for the untrained person. And I can assure you, and again, I don't know this for sure, but I'm pretty confident that for every great, crazy story you've heard, there's thousands of other horrible stories that you don't hear about of people losing all of their money or doing something really screwed up where they've put their financial goal and their financial plan in trouble. So I'd highly encourage you to work with a qualified professional, such as a chartered financial analyst or certainly a competent financial advisor, rather than trying to go at this alone. Now, one point I wanted to get to, though, is while we do look at the individual security selection, what's actually more important than that alone is how the entire portfolio is allocated, right? So we really focus on that, and that gets into those colored boxes, what our stock to bond blend is. That's what's really going to drive performance, even though the stock selection part is the sexier part and the stuff that hits the headlines. Overall, your makeup of the big portfolio, that's what's going to drive your performance. And that's what we ultimately focus on. So there are some other metrics that we look at according to that, such as R squared or information ratio. So there are things that we can look at when we're building the big portfolio. But again, so we get down granular, we'll pick the individual stocks, but more importantly, we want to see how that big asset allocation is monitored and handled. And that's what's going to drive your performance over the long term. So good. So again, I peeled back the curtain here a little bit, gave you a little bit more insight into how we pick individual stocks. Certainly, if you have any questions, you can email me directly at jake@falconwealthadvisors.com. Also, if we're already not connected on social media, I'm on 4 social media platforms. So I'm on Instagram, Twitter, Facebook, and LinkedIn. Also, my practice, Falcon Wealth Advisors, is on the same 4 platforms. We're on Facebook, LinkedIn, Twitter, and Instagram. As far as fun topics, I'm recording this right before the July 4th holiday. So I'm excited. I'm going to Chicago this weekend with Rachel and some of her good friends from high school and their significant others. So be on the lookout next week on Upticks. Hopefully I have some pictures to share with you. I think we're going to go to aquarium, museum. I don't think the Cubs are in town, so I don't know if we're going to go to a ball game. I think they actually want to play mini golf, which I'm really excited about. Hopefully I don't lose. I don't think the other guys golf that much. So again, it'll be really embarrassing if I do lose at mini golf. So hopefully that'll probably be my highlight of the trip, but we'll see. We'll see how that goes. So stay tuned. Make sure you're tuning next week. I'll give you an update on mini golf. As far as books that I'm reading a really good book right now called Loon Shots. It's about how innovation changes the world. It's a really fascinating book. I do recommend it. I'm about a third of the way done, so I plan to take it with me to Chicago to read on the plane. So hopefully I can continue to get through that. I've got a big stack of books that are on deck, so I'll continue to read through those. And summer's here, so again, more golf. And again, hope all of you out there are staying safe and healthy. Thank you so much for tuning in, and hope you have a great week.